Hello everyone, welcome back to Current Economy and Investment Insights. Today is August 16, 2021. I'm Ron Jankowski with Palos Heights and Channel 4. My co-host is Paul Munichel with Ameriprise that you have seen carrying the weight while I was on vacation. Paul, give us an update if you can, and then I will come back with some notes that Ameriprise sent us of what's happening as of this morning.
Great, thanks Ron. It's interesting to note that valuations have improved materially even as stocks continue to move higher. Investors were on edge back in May as a growing list of commentators highlighted the fact that the market valuation metrics had risen to levels not seen since the internet bubble period of 1999 to 2000. Thus, they were implying potentially similar repercussions. Now, in research we published at Ameriprise at that time, back on May 20th, are stock valuations too high? And we noted, quoting, stock valuations are high relative to their history, but that does not necessarily mean stocks are overvalued, end quote. So from that close on April 30th, to Friday, August 13th, the S&P 500 has gained about 6.9% on a price-only basis. Yet, the trailing price-to-earnings ratio, the PE ratio, for the index has declined nearly 5 points, from 29.6 to Friday's 24.9. The rather sharp decline actually occurred on Friday when the strong earnings per share results of Q2 turned actual and replaced those of the depressed earnings per share results of Q2 2020 in the trailing PE calculation. What that means is if the S&P 500 earnings per share forecasts for Q3 and Q4 prove accurate, full year earnings per share results for 2021 of a currently estimated $201.79, that's per fact sheet data, would equate to a PE ratio of 22.1. At today's S&P 500 level of 4,468, means that there could be potential room for the market to continue this rally. Again, potential being the key word there. The market has its own mind, but potentially we could see a further increase in valuation.
All right, and Paul, the note that I got from Ameriprise this morning is the U.S. stock index futures are pointing to losses at the opening with three major averages off nearly 0.5%.
That's expected. I mean, we were reaching highs all throughout the month, Friday included. So these pullbacks happen intraday.
Normal process.
Nothing out of the ordinary there. It'd be interesting to see how we close. Buyers usually come in when they get a dip in the market.
Right. They also said that the yield on a 10-year Treasury is lower, with investors focusing on minutes from the Federal Reserve's latest meeting. It's due to publish on Wednesday.
People are worried about inflation, as we've talked about, and how that can affect the market going forward, and the bond market is reacting to that. Nothing major.
And lastly, Japan Nikkei 225 fell nearly 2% overnight after a new retail sales data out from China, which fell short of expectations, and the oil futures are lower by 2% on concerns over a potential economic downturn.
Yeah, I mean, people are kind of in a waiting period to see what's going to happen with this new COVID Delta variant and what that may do to the economy. And it's got some people on edge with, is there going to be a shutdown? Do we need to remask? All these questions are in the air, and economies are looking for those answers.
Yeah, a whole lot of unknowns at this time. The year-to-date returns for the S&P 500 is 20%. Dow Jones is S&P 500 is a plus 20%. Dow Jones is a plus 17%, and NASDAQ is a plus 15%. And again, those are year-to-date returns. All pretty solid.
Yep, great numbers once again.
Well, stay with us. We'll be right back. We're going to share with you the show Your Money. Paul usually has an excellent topic to share with you then. Stay with us. We'll see you then. And we're back with Your Money. Thank you for staying with us. And Paul's got an excellent topic, the difference between budgeting and financial planning. So, Paul, I'm going to let you take it away.
Thanks, Ron. Let's just dive right into it. Great introduction. You know, budgeting and financial planning are two terms that are easily confused. Both apply to personal finances, and both are activities that can help you be financially successful now and in the future. Yet, while the two go hand in hand, they are not the same. So let's go over some ways they differ and how they can work together to help you accomplish your financial goals. Let's start with budgeting. Budgeting sets guardrails for your spending. The goal of budgeting is to help people live within their means. A budget predetermines how much you can spend during a certain length of time based on your actual income. Now, individuals who follow a budget are better equipped to avoid overspending. To create your budget, you divide your income across your expenses for a given time frame. This time frame is typically tied to your pay schedule, whether that be weekly, bi-weekly, or monthly. Fixed expenses such as rent and childcare take priority, and after accounting for fixed expenses, spending parameters are set for necessities that vary in cost, such as food, transportation, and clothing. Remaining dollars can be allocated for discretionary spending, such as dining out and entertainment. A budget may also include a rainy day or vacation fund. Remember that budgeting is an active process, so to be successful, you need to track your spending and be prepared to make adjustments. A budget that offers some flexibility is generally easier to follow. Now, budgeting can help you spend within your means. However, you can budget forever and still not reach the type of long-term goals financial planning is designed to help you achieve. So let's dive into some financial planning. Financial planning does provide a roadmap for your financial future. Unlike budgeting, financial planning is not limited to the present time. Your financial plan considers where you are now, as well as where you want to be in the future. It requires vision. The purpose of a financial plan is to formulate action steps to help you afford your life goals. It charts your course to reach milestones, such as home ownership, starting a family, higher education, and retirement. Like budgeting, financial planning is a dynamic process that benefits from both regular review and adjustments. A financial setback, windfall, or other shifts in your life circumstances will affect your financial plan. A certified financial planner or a financial advisor who offers financial planning services can help you create a tailored financial plan. This professional can be a resource for objective advice about financial decisions going forward. Your comprehensive financial plan will likely utilize insurance and investment products to help you protect your assets and grow your savings. Now, budgeting and financial planning work well together. Following a budget can help you manage your money and avoid debt, but a financial plan can help you achieve your long-term financial goals. Again, talk to our financial professional today to learn how you can benefit from both of these important financial disciplines.
Paul, you were talking about budgeting and living to your means. To do that, you have to have a financial advisor, or you should have, to understand what your visions are and can you afford them.
Right. I mean, budgeting is often, most people seem to be able to handle the budgets on their own. It's the financial planning portion, which is where I think you were going, like I said, buying that house, buying a car, getting a vacation home. That's more financial planning.
To achieve a goal, it'd be one of those assets that you want to buy.
Exactly.
And, yeah. You really need to have someone, if you can't do this on your own, to plan how are you going to save your money so you can reach those goals.
Right, and everyone's different. You know, your goal may be to buy a dream car. You know, someone else's goal may be to buy a second home. But the one thing pretty much everyone has in common is the retirement goal.
Yeah.
A financial advisor can help you reach all those. We're equipped to help you with those. I meet most of my clients by planning for retirement goals. And speaking of that, if you do have a financial advisor, that's great. But if you don't have one, or if you're looking for a second opinion to the one you're working with, feel free to give me a call. I can help you directly at 708-226-3412.
Very good. Thank you, Paul, for bringing that to the viewers. For Paul Munico with Ameriprise Financial and myself, Ron Jankowski with Channel 4 and Palos Heights, we wish you good investment day.